Hello, ladies and gentlemen. Welcome back to the Harvesting Income channel. Today, I'm going to talk about a previous fund which we discussed in one of the you know past videos. That is the HHIS Harvest Diversified Income Shares ETF. This was one of the ETFs that was providing pretty high yield. It was a new fund launched back in I think it was launched around January. Like it's about 6 months now. This fund has been giving a higher amount of yield. Like basically, the fund distributes 25 cents a month. You can see the details here, and the NAV is around $12.88. When I was first shooting the other video, and somewhere around that time, these funds were pretty much down. The price was down to $9, and the markets were down as well. So that was a great time to get an entry into this fund and get a good yield. So just wanted to quickly go through this fund. If you have not watched my previous video, you can go ahead and watch the previous video on HHIS where I have described the fund and its pros and cons and detailed analysis of the fund. Okay, with that said, I'll give you a brief here. This fund basically is a multi-sector portfolio, and it actually has a collection of different individual covered call funds. Uh, to give you a quick idea, like these are different, stocks: Coinbase, Broadcom, Nvidia, Palantir, and you have Netflix, Microsoft, and so on. You have all these single stock covered call ETFs, which are part of the harvest portfolios, and they are packaged into this fund, like more or less equally weighted. There are about 15 funds, and so about 6% something in each fund, so equally distributed. And it's a great option for income seeking investors because you're getting a good amount of yield, and also you're getting an opportunity for capital appreciation. Because if you look at all these companies, these are all blue chip companies. They grow pretty fast, and there are also a lot of tech names and cryptocurrency names, and also the blue chip companies here, which also have a growth potential in addition to giving you that yield in terms of the dividend, plus also premium income through option covered call writing. Okay, now let me tell you the give you the idea about the distributions. Like if you look at the distributions, like they started back in January, and February, March, April, May, June, they declared about one, two, three, four, five dividends so far. And so let me quickly do the math and see where these dividends are in terms of the yield, and we'll know exactly how much dividends we can expect. Okay, so this is the current dividends. We have five dividends, so I'm going to go back to my sheet and check my numbers. So the price that I purchased it at is would be 11.69. I have to find the current price, but this is the average cost for me. I purchased the fund at 11.69, and not precisely at that point, but I started purchasing when it was $9.50 and so on, and kept adding on to it. So let's check our numbers. Okay, so I have the my average price 11.69. The fund pays 25 cents a month. So based on that, this is an estimate, guys. This is not a perfect number, but if the same rate of dividend is sustained for 1 year, let's say for another 6 months, 7 months, so that completes 1 year. So they would be able to do 25 cents times 12, which is $3 for the year. So $3 dividend on 11.69 would be like 26% yield, roughly 25.7 to be precise. So that's the number we have for the yield. So so that gives you the approximate yield based on my cost. Like, so if you have purchased this fund in the past, and if you have this in your portfolio, you can do your own calculations. And this is not financial advice. A disclaimer: this is not a advice to buy or invest in this fund. And by the way, this video is also not sponsored or endorsed by any fund or anybody. So this is just my video and my views here, just for knowledge purpose. Okay, now let's see, based on the current price. Let's assume that you're going to make a purchase at the current market price. So I'll go back to the fund page and check the current market price. Current market price is like $12.90. So if I say $12.90, $12.90. So if I say $12.90 current market price and look at the yield percentage, it's about 23% here. You can see it's about 23%. So based on the current price too, you're getting a 23% yield, which is not something to laugh about, because previously it was like a little higher, but now it's dropped down by about, you know, 2% something, and still you are getting close to like 2% a month. Like, I mean, that's a great dividend yield or a distribution yield from an income fund, and this can help you invest into other options. And the beauty of this is the price has also appreciated. Like, let's look at, go back to the funds page to look at the price appreciation. Most of the high yield funds actually erode value or they lose their net asset value, but in this case, let's see what happened. Okay, the net asset value of the fund is 1288. Market price is close to the same number, like 1290. It's almost the same. Okay, let's look at the 1 year. Let's look at the performance since inception. Just going to go all the way down to performance. Okay. Okay, since it's not completed 1 year, they are not showing the performance in this page. But I'm going to look it up on, say, Google. Let's do a quick analysis here. So the fund was launched January. Okay, so $12.53 when it was launched. Now it is $13.06. So launch price is $12.53 and current price is 12.90 over here. So let me bring this up here. Yeah, it has moved up. Actually, as we are looking at this video, the price has gone up, but I'm going to take a lower price for, just for the example here. So appreciation would be, because the market is currently open, so that's why the prices are changing. But let me take the closing price 12.90 for now. So the increase would be $12.90 minus the 53 cents. That would be the increase, 37 cents, and divided by the base amount invested, $12.53. Perfect. So that gives us the appreciation, 3% appreciation. So you got 3% appreciation on top of a yield of 25.7%. So now if I look at my total returns, that would be almost like 28%. So adding both, I'm sitting on like 28%. And that's phenomenal. Like, even if I look at the other side, if I look at the other side too, if I add 3% to this, I would be sitting on 26% returns, which is phenomenal. Like, phenomenal, because you're also getting the high dividend yield plus also a great amount of capital appreciation. So this is a fund that one should consider if you are looking at investing in these kind of stocks or in funds which invest in these tech stocks, because you're getting a good balance of dividend appreciation plus also the sorry, not dividend appreciation, the capital appreciation plus higher dividend yields. So far the dividends have been stable. Like, it can vary in future, we never know, but so far the fund has decided to keep it at 25 cents, and after a period of time it could change, it could be variable. So that's another disclaimer to keep in mind. But however, whichever way we look at it, whichever way you slice it, you can see that there is going to be a small appreciation in the NAV of the fund. Plus, you are going to get 20% plus returns, assuming the returns go up and down. Like it could be less, it could be 20%, it could go down to 18, 50, 15%. You never know. There's no guarantees here. But since they write covered calls and earn premium income, they will still be able to generate that yield even in a kind of a flat or a down market. So so that's a great fund. Like you're getting 20% plus small appreciation on your NAV too, and that helps you save and create wealth for the future. So I think HHIS is still performing well, and a lot of comments were coming about the higher current price has gone up. You can wait for the correction. Like I waited for that too, but unfortunately even I could not get it at a lower price. Even I had to buy more at a higher level, like around $12 something. And on an average I'm able to, I was able to purchase it 1169 because I had a previous bunch of stock at lower price. So if you're looking for this kind of option to invest in covered calls and make higher returns, you can consider this fund as one of the options. So that's my advice. So I hope you like this video and this special segment on review of the HHIS. And if you have any questions, comments, anything you want to share, please drop in your comments below, and I will see you back in the next video. Happy investing.